Well, the S&P 500 and Nasdaq both hit new record highs earlier today, led by news of the trade deal between the U.S. and China. But the numbers closed mixed after the president pulled the plug on trade talks with Canada. Now, the S&P is up 32 points, closing at a new all-time high, 6,173. After losing some of its initial traction, the Nasdaq ended the day up 105 points. That's also a record. The Dow Jones also ended the day in the green, up more than 430 points. So, Laila Maidan joins us now. She's a tech and investing reporter for MarketWatch. All right, a lot of numbers I just threw at everyone. You know, we saw the market pop on that initial trade announcement with China, then it pulls back because of Canada. It ultimately ends up in the green, and we hit record highs on two major indices. Is this a sugar high?
Well, for the last couple of years, the market has always wanted to lean towards a more positive outlook, more optimistic because of the AI trade. There's this huge revolution with AI. But when we get certain things in the macroeconomic environment that spooks the markets, we see these rapid pullbacks, and then we see these rapid recovery. So it's been a
like in April, right? Yeah, we saw that big pullback.
Yeah. Well, you know, in April, at one point, the trade wars between the U.S. and China, they got as high as 145%. So, you know, these things are catastrophic for markets. But as the negotiations continue to go on, we got really good news about a so-called framework agreement today between the U.S. and China. It sent a message to the market of what it initially suspected was going on, which was the president was using a lot of this for leverage to negotiate and bring these countries to the table to get these deals done, and not because we wanted these like sky-high tariffs to stick. And so that's what we're seeing. We're seeing quick reactions. Even when the news came in about Canada in the afternoon, we saw the market plunge, but then really quickly it came right back.
Well, so let's stay on Canada. You know, he posted today that he terminated all talks with Canada. He's going to announce with what the tariff rate will be within the next 7 days. What industries could be impacted by that?
Well, that's going to be, I mean, right now it's the big tech companies, right, that have exposure to the Canadian market. But, you know, on the tech side, the big problem with this is that Canada wants to implement it retroactively, and so charge taxes all the way back to 2022, which is, I think, what the administration has a bigger problem with.
And just to clarify for our viewers, you're mentioning the digital services tax, and that's sort of what President Trump is reacting to and saying, hey, we're going to stop all negotiations. We don't like this. The follow-up on that, though, I was looking at the reaction from the tech companies. They seem to be happy about this. In fact, Meta specifically came out and said that they appreciated that the president is protecting American innovation. We have that, actually, their response there for you on the screen. Is this good for American tech companies that he's taking a stand? It might be bad for the steel industry. Of course, that's going to cost more. We get a lot of that from Canada. Is it good for tech?
It's obviously good for tech, but here's the thing. I think when we can look at the market's reaction to see what is the reason for all of this, and the fact that the market rallied back up before the close suggests that, okay, this is another negotiation tactic. We don't really think that there's going to be a full-out trade war with Canada, because the reality of it is the U.S. imports a lot of basic products from Canada that needs to have those prices stay, like petroleum, like aluminum, like wood. This is important for the construction industry, housing. So neither side wants this, but I think it's the retroactive tax that they want to back tax all the way into 2022 that is, I think, upsetting the administration. Look, this could hurt Canadian consumers too, because they can pick up the bill for this tax, but it's not personal towards U.S. big tech industry. This is a tax that Canada's imposing on all major tech players globally and even domestically.
It could be a negotiation tactic. We've seen this back and forth.
We hope so, yeah.
Very quickly, we got some inflation and consumer spending data. It does show that consumers are spending less. It dropped in this last month. Are you worried?
Well, the data that it dropped on was vehicle purchases, which is that's a blip in the radar, we can say. And why is that? It's because earlier in the year, consumers rushed to car dealerships to purchase vehicles on the fear that tariffs were going to go up. And so we saw an uptick in that purchasing, and this is sort of a rebalancing back of it. And so we don't expect that to be a number that's going to stick. But if you look at more discretionary spending, like clothing spending was up, household goods spending was up. So there were other things that balance that out a little bit, but we'll wait and see.
Good context. We're not buying cars every month, to your point. Laila Maidan, thank you.
Thank you.